Hello, this is Anthony. Welcome to my show, where I look at various ways to increase your income as well as investing in the stock market. Remember, this is not financial or investment advice. I'm not a financial advisor, just somebody on YouTube providing entertainment. But before we start, could I get you to please click the subscribe button below? It would really help me out in building a following on YouTube. So, if you're like me and watch a lot of finance-related YouTube videos, then YouTube will probably suggest all kinds of videos that scream hyperinflation. Eventually, after seeing all those thumbnails warning against the impending hyperinflation, you might believe that we're facing hyperinflation. But what's the truth? Here is the definition for hyperinflation from Investopedia, and I think most economists are going to agree with this definition. Hyperinflation is a term to describe rapid, excessive, and out of control general price increases in an economy. While inflation is a measure of the pace of rising prices for goods and services, hyperinflation is rapidly rising inflation, typically measuring more than 50% per month. So, are we experiencing hyperinflation now? Will we experience it in the near future? In the United States, the official inflation rate was 6.8% by the end of 2021. Let's fudge the number a little bit just to make it easy and say the inflation rate was 6%. And we have 12 months in a year. That means the average inflation rate in 2021 was 0.5% per month. 0.5% is much lower than 50% per month, which we agree is the definition of hyperinflation. But you may say, yeah, we don't have hyperinflation now, but we might in the near future because the Fed is printing so much money. Yeah, but the Fed has been printing a lot of money for a long time, and critics point out that they printed massive quantities in 2020 and 2021. Yet look at the inflation rates for those 2 years. It was 1.2% in 2020, and again it was 6.8% in 2021. And let's think about prices in comparison to inflation. There's going to be generally two main reasons for an increase or decrease in prices. One is going to be inflation and the money supply, but the other component of the price is based on supply and demand. Because of the ongoing virus situation that affected supply chains throughout the world, but especially in China, which is the factory that produces just about everything Americans consume, besides food, housing, medicine, and petroleum products. Because of supply chains issues both in China and in American ports, there are dozens, if not hundreds, of ships off the coast of California waiting to unload their products destined for American consumers. When the products on these ships get delayed in getting to store shelves, that allows store owners to increase the price of what products remain on the shelves, since the demand has remained the same, yet the supply has gone down. And remember a year and a half ago when people started posting pictures of empty store shelves on social media? The store shelves out here in Oregon were fine. They were fully stocked with toilet paper and paper towels until they weren't, because people, including myself, knowing that people were going to panic and start buying up all the toilet paper, went to buy up all the toilet paper that we could. And then you could go to a store here and not a single paper item was on the shelf. Now I just checked to confirm that the toilet paper that I buy is made in the United States, not subject to supply chain issues in China or American ports of entry, and people certainly were not using the restroom anymore after the virus hit. But that was a case of panic buying because other people were panic buying. Incidents like that can cause prices to go up, though the prices are not based on an inflation in the money supply. And what other factors go into the government's various measures of consumer prices? I'm not going to go into that in detail, but I would recommend that you do your own research. But for instance, about 1% of the formula is tobacco. Well, if you're like me and don't use tobacco, then that segment should be 0%. And if you do use tobacco, then likely it would be much more than 1% of your spending. If you work from home or ride your bike to work, then gas probably doesn't play much of a factor in your spending, although the price of fuel is factored into everything that you buy from a store, since it's delivered in a truck that uses fuel. But let's say that you do believe that inflation is on the horizon and you want to do something about it. What do? What is a hedge against inflation? Precious metals, or at least that's the advertising. Are gold and silver hedges against inflation? Many people will tell you yes, especially people selling you gold and silver. But before you buy into that hype, do your own research. Don't listen to me, although maybe I will prompt you to do your own investigation. And think about this before we look at the statistics. All those people selling you gold and silver and other precious metals, how do they want to be paid? In dollars. If they thought that gold was such a valuable commodity to have, then why are they trading their valuable commodity to you for your depreciating fiat currency? Okay, let's look at some price charts, but not until we think about how we can own gold and silver. Certainly you could own it in physical form in bars or ingots or coins. There are a number of downsides to that, but I'm not going to go into them in this video. But another way to own them, or their equivalent, which is much more convenient, is through ETFs that are traded on the stock exchange. An ETF is an exchange-traded fund. It's a mutual fund that is made up solely of gold or silver. I will look at charts for each one, but very quickly the most commonly ones available are the Spider Gold Trust, which trades with ticker symbol GLD and represents 1/10 of an ounce of gold. There's also the iShares Gold Trust, ticker symbol IAU, and is equivalent to 1/50th of an ounce of gold. For silver, there are iShares Silver Trust, ticker symbol SLV, and the Aberdeen Standard Physical Silver Shares ETF, ticker symbol SLVR. Both of those are equivalent to approximately 1 ounce of silver. So let's look at the charts for ticker symbol GLD and see how good an investment in gold has been, and see how it's been as a hedge against inflation. Now, obviously, looking at a historical chart, you could say, well, if I would have bought it in this year when it was low, I would have bent up this percentage. But of course, that's looking at it in hindsight. And if you don't have a time machine, that's not a good argument about being able to coincidentally buy at the lows and sell at the highs. But as you see, the closing price today, January 6, 2022, was $167.03 per unit, and this again represents 1/10 of an ounce of gold. But look at the chart and go back almost exactly 10 years to 2012. The price of gold was almost exactly the same as it is today. And think about that. You would have not made a single penny if you would have bought gold 10 years ago, yet we've had inflation since then, right? Certainly. It's been pretty low. But according to the chart, if you think that gold price appreciation somehow matches or exceeds the inflation rate, you would conclude that there has been no inflation in the United States for the past 10 years. And looking towards the right hand of the chart, which is in current dollars, the price of gold was higher back in 2020 than it is today, even though we have higher inflation now. And the charts for silver are even more counterintuitive vis-a-vis inflation. Again, I'm not giving advice here, but if you want a hedge against inflation, then it would seem to me that in the long run, an investment in an equities index such as the Dow Jones Industrial Average or the S&P 500 would, over the long run, outpace inflation and certainly outpace gold or silver. One argument against gold and silver that I don't agree with is that it doesn't pay dividends. What are some other investments that don't pay dividends? Berkshire Hathaway, Amazon, Facebook. You don't need to have an asset that pays dividends. You just want to have an asset that when you sell it, it will be worth more in real terms, which is adjusted for inflation, than what you bought it at. So that's what I have to say on the matter, but what about your opinion? Do you own gold or silver, or have you been thinking about purchasing it? Did I change your mind or at least make you think about other options? I would love it if you would leave comments in the comment section below and let me know what your opinion is. And it's perfectly okay if you disagree with me. This is your opportunity to convince me and the other viewers that I was wrong. Again, if you like this type of content and want to see more, it would really help me out if you subscribe to this YouTube channel. Also, please view my other videos, and if you like them, click the like button. I'm on Instagram at Anthony R. R. Mills. You can follow me there. Thanks for watching.